Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is February 28th, 2013. This is actually my second go around on it because the first time I did this video, I decided that it would be really cool to do the entire LiveCharts session with the microphone on mute. So I had a good warm-up session to say the least. So I should be, I should know what I'm talking about on the second time around here. If you sense a little bit of irritation in my voice, you're probably right, because I don't like to waste extra times doing something that I did good the first time a second time. So in any case, with that said, let's go ahead and look at the S&P 500. Thank God that the market's coming to an end this week for the month of February. I know a lot of traders, just talking with them, they've been very I guess frustrated would be the right word to use, about the action that we've seen this month. I mean, for the most part, we've gone nowhere. I mean, just let's go ahead and look at it here right now. We ended the month of January. We ended the month of January at 1498. We're at 1521. So we did make a little bit of progress. We made about 23 points, which is a little bit more than 1%. But overall, from a trading perspective, it was just very difficult. And I think what the undoing for a lot of people was this here, where you had a huge breakdown that occurred at the highs. You had a dead cat bounce, went perfectly to play. You gapped up that next day and then just floundered the rest of the time and just had a huge sell-off on Monday. And then, I mean, and not only that, but I mean, goodness, the wingspan on this thing was like 1525 all the way down to 1487. So it was like a 40 or a 38 point drop in the S&P alone. Now that's a good sign. I mean, the VIX index was up like 33% that day. Great sign that the fear was just all over this market and that you'd have a continued selling. I thought at the very least we would get down and test this bottom rising channel, which we did not do. We came within a few points of it, but no cigar. We got the bounce on Tuesday, and that looked like, okay, it's just another dead cat bounce, sort of like what we saw on Friday. But then it just, ripped the bears to pieces yesterday, and then you get the continuation along today, which squeezed more bears out of individual stocks. Right now I got 2 shorts, 1 long. Really not too anxious to add more positions to the portfolio today. Instead, I'd like to see how things shake out here. If we can get some more downside, perhaps we get a down candle today, and it's going to be obvious going into the close that we're going to finish in the red, which we're not really close to doing right now, but hypothetically speaking, then I might add a new short position to the portfolio, because right now, 3 days, we've rallied some 40 odd points from trough to peak. I'm really not anxious to want to pile on to long positions, especially since that the technicals of this chart has not improved at all. It's just been one wicked bounce off of Monday's lows. So that said, I think it would be foolish to even try to add more hedge to the portfolio. I think I need to let these current positions work themselves out. If it warrants to add more shorts, or it warrants itself that the technical picture has improved enough to get rid of the current short positions and start adding new long positions, fine. But I just don't see it. It's really a difficult, tricky point that we're at in this market here, because it's just not showing its hand to us very clear. And I've always been a big person on saying, trade what you see, not what you think. Go with what the market and what the charts are showing you. And if you do that, I think, even though you might go through patches of weakness, like what I'm basically experiencing, this month in trading, I haven't had a down month in like 3 years. So I might be breaking new territory here tonight for the first time in a long time if February finishes in the red for me. But that's going to happen, and it's not that I never expect to have a down month. I just don't like it when I do have them, and I'm always very confident that I'll bounce right back from them, because I have in the past. And most people won't open up and tell you about their struggles, but I don't think that a lot of people can get better as a trader if they don't hear about the struggles that people are that successful traders are going through. And here's the thing too, is that everybody likes to talk about their struggles in the past. Nobody ever likes to talk about their struggles at present time. And I'll tell you, these past couple of weeks have sucked. I mean, every trade it seems like I'm trying to put on, in the last week and a half or so, it's just not working. And we got one trade in our portfolio right now that is working, Adobe, and that's been a roller coaster. There were a couple times where I thought about closing that one out for a small loss. I did, and I used it as a hedge, and it's benefited as a result because it's up about 2% right now. But the short positions, I mean, they look good in the beginning, like CX and ILMN and Hog, but they're struggling now. So, I think that it's good for people to learn about the struggles as traders, because no matter how good you're going to be as a trader, it doesn't matter if you become the best trader in the world. You're still going to have struggles. You're still going to have months that aren't good. You're still going to have weeks that are bad, days that are suck, and what I think I can share, if anything, from this time is not to let it go to waste, but to share with you guys that it does happen to a trader that's been going for 21 years at it now, and I'm still having times where I want to pull out my hair on this market because it's showing me one thing and then the next day it's doing another. So I'm not upset at myself for the way I've traded it, because I have traded it the best that the best that I can, and based on the information that it provided and the charts and how they set up, I did it right. The problem though is that the market just had different intentions. So you have to go through these rough patches and stay confident in your ability to trade, not get down on yourself, and try to basically wait it out and just keep trading through it. It's like basketball. You'll hear about some of these basketball players. They go on a cold streak and instead of yanking them out of the game, the coach will actually say, shoot your way through it. And sometimes you have to just keep on trading, and then it'll work itself out, and you'll get back into the game there. So sometimes you got to trade your way out of it. That doesn't mean you take foolish high risk types of plays when you're not at your best performance period. But what it does mean is that you don't back away from trying to get out of it. You just don't close the books and say, I'm walking away from it for a month or for a week. You just don't do that. So let's go ahead and look at some of the stocks in the portfolio right now. Hog, there's a temptation to want to close it out, but overall, I mean, it looked really good on Monday after that sell-off. We were up a decent bit, and it's given back those gains. And the thing is, though, is it really hasn't improved on the technical picture that much. I mean, it's broken through a couple of resistance levels or prior support levels, but it hasn't gotten to a point where A, we've been stopped out, or B, where it sort of has crossed that final line in the sand. So I want to keep holding on to this because I do still think that this chart looks very weak to me. It doesn't look like a bull flag. It's definitely not a bull flag. And I think that this thing is in the process of turning over. It's just that we gotta catch it at the right time. So let's move on to the next one, TRI. This one has a lot of resistance overall right here at the top. It's had some bad earnings. It's sold off twice here really heavily, and now it's basically working itself back up. If it breaks above this range here, then at 30.90s, that's where I'm going. My stop loss is at 30.97. And so if it hits that, then obviously I'll be out. I'm not going to sell this until that happens. Or I'm not going to cover the position until that happens. 50-day moving average is being a little bit of a train wreck for this stock too. It's holding on stronger than I foresaw that happening. And then the lone long position here, it's come down a little bit today, but overall, it broke out yesterday perfectly to the upside. Looks pretty good. Had high volume yesterday. So hedges against the other two positions. Ideally, what I would love for it to see happen is those two other positions do really well and this stock get stopped out, because if that happens, there's a good chance those other two positions will do pretty good. So let's look at some of the charts that you guys submitted that you asked me to go over real quick. ACI is the first one, a coal company with a double bottom in play here. I would not try to play this thing off of this. There's not a real strong support level except for essentially like one day. Now, if you were going to do it, I'd probably put my stop around 5.15 or so, which would be below the lows from the July of last year. Put it at 5.15, but I just don't see this thing really going anywhere. AOS. This is sort of like the hog stock that we just went over. You had a great looking action here on Monday where you saw it going straight below some key support levels, only to bounce for 3 straight days later on. That's what's making this market so difficult to trade. Right now, I would hold off trying to get short on AOS. Definitely would not get long on it. There's no edge to the long side, but to the short side there is. But you need to see some more downside momentum to it first. This bounce has got to stop before you get, to adding new positions. RCI I really like because what you have here is a nice trending uptrend, nice trending uptrend. And it's like a bull flag consolidation pattern here. Maybe not a true bull flag, but the consolidation is very nice. So 47.97 would probably be your key entry point where they stop at, say, 46.54. So a very good risk-reward setup here. I do like this. I'm going to add it to my watch list, and it will definitely be published tomorrow when I do that post. Final one is GDX. Here's what I don't like about GDX, and the question about GDX was, should I short it here? And I definitely say not to, because first of all, it's gone from 55 down to 37 since September without much of a break. No counter trend rallies, nothing. The ideal point would have been to get in around 44 when it broke this massive, slightly rising support level. Getting in here, you're just hoping that it can continue doing what it's already done. And at that point, I don't think you have a clear edge on this trade. So I would avoid, even though it looks tempting because it's breaking out to new lows, don't short this stock. All right, well, that's going to do it for today. If you guys have any questions, feel free to email me at ryan@sharepointer.com. Otherwise, I'll be in the splash zone all day today and tomorrow. Tomorrow is a new month. Whatever frustrated you about this month, throw that away with the bathwater. And get ready for a new month. Clear your mind. Go see a movie or something tonight. I might do that. I need to go get out and relax a little bit. The last couple of months of trading in the beginning of a new year has been a bit volatile, particularly to the upside. We'll pull up the SPX chart here real quick. Obviously, you had the huge bounce in January, December. December you had a little bit of a sell-off, and then November you had a decent uptick. So it's been volatile. Which way it goes, nobody knows. But I think there's a good chance you could see some increased volatility tomorrow. That's going to do it, y'all. Have a great evening, and God bless.